Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. On the gold market, actually, we do not have big shifts, big changes on Friday, so actually market has completed predefined area that we have discussed. This possible pullback might be just because investors will start booking the result, and especially if the payrolls will be more or less positive. So suggest that some pullback should happen, hit the 2010 area, which was the support, and intraday trend line support as well. So that has happened. Based on the daily picture, we could say that mostly market has finished the minimum reaction on the butterfly target and even has shown a bit greater reaction. Usually it's 30% enough, but since we've got lots of important events, last week the reaction was to the 618 support area. Currently, as we said last week, we do not expect any big drop on the gold market, so hardly we will see collapse somewhere below below these lows around 1970 or somewhere. Most probable that market should remain in this area of 1970 and 2070. In this range is just because uncertainty, a lot of uncertainty right now concerning the banking crisis, concerning debt sale, some other stuff, so that just do not let gold to drop. Investors will be a bit nervous, stand in tension, and probably keep interest in the gold market. But as soon as the starting of the June, we could get the big moves on the gold, just because we're coming tight to the problem of the debt sale. Janet Yellen last week said that government and the United States Treasury could meet the problems as soon as the 1st of the June. Other banks, big banks, as JP Morgan, Morgan Stanley, is more careful with the assumptions. Watching on the tax collection, they tell that now the tax collection is a bit improved compared to the first week and giving more cash to the Treasury, but at the same time Treasury have to spend lots of cash for saving the banks and supporting the FDIC agency. So but anyway, about the X day, it could come starting from the 1st of the June up to the middle of the July, so it's not quite definite point. But anyway, as we are coming closer to it, be careful with the gold positions, especially you prefer to hold it for a few sessions or through the weekend, because in the case of default, you understand what will happen. In the case of the rising of the debt sale, we could get great short-term collapse on the gold market, because slowly, but maybe investors do not recognize it clearly, but in some hidden manner, but the debt sale problem is slowly but minor steps is pricing in the gold level, and as soon as this problem will be resolved, big collapse could happen. It maybe will not carry any meaning to overall fundamental background and gold performance in the longer term, but in the short term, maybe within 1-2 sessions, it might be a great drop. So that's what we have to keep in mind. But this is not for next week. On the next week, we do not expect anything of that sort. And I think that we could keep an eye on a few levels to consider possible taking the position. Trend on all time frames stands bullish. Daily, monthly, weekly. Our bot area stands on the daily chart around 21. And next target stands also about 21. Right there. It's 161 extension of the same butterfly. But the problem is actually from the technical point of view is that on the 4-time frame chart we have two strong collapse on Friday. So market just dropped right back down. Here's result. We also have got the conference, if you remember, the market just breaking down. So hits the agreement support around 2010 area. OP with the major 618 level and form a trend line of the triangle that we were considering last week. Taking into consideration this impulse, personally, I do not want to buy right there, at least right now, because if we'll take a look at the hourly chart, here's by the way the confluence, you do not see any bullish patterns yet. So we have to keep an eye on next week. If market will able to stay around 2010 area, forming some bullish pattern, for example, it might be the butterfly or a hand and shoulders, that will be the background for a possible taking position around it. If nothing will be formed and market start dropping below, so in this case we will keep watching for 1983 1984 area, which is the XOP, because market needs time and space to fade bearish impulse on Friday, and XOP particularly could serve for this purpose. So when market will gradually start dropping to the XOP, momentum will be a bit start fading, and maybe around XOP we will get something, or maybe greater pattern will be formed. We will see. Maybe this will be, I don't know, large gauges cheaper to buy. It's also possible. So that's approximately what we intend to do. In 2 words speaking, as a bottom line, watching for the same area where market stands right now. If bullish reversal pattern is forming on hourly chart, we consider taking the long position. If nothing will be formed, we're watching for XOP around 1984, and then repeat the same action, watching for the patterns. That's all.